The danger to the volatility is that you throw participants offside and into margin calls. And if you do that on a grand enough scale, if it's big enough and far-reaching enough, you're going to hit somebody who's big that can't pay. And that will start off a daisy chain of derivative failures. There's over $2 quadrillion worth of derivatives outstanding, completely dwarfs the financial system, completely dwarfs all treasuries and all sovereign central banks on the planet. So the danger is that you get a derivatives player that becomes insolvent, and then it will spread like a wildfire from there.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 8th through April 15th, 2025, while supplies last. First this week, we feature 2025 1-ounce silver Canadian maples at just $3.49 over spot per ounce. Constitutional or junk silver is just $1.99 over spot per ounce. 1 10th-ounce Platinum Britannia are just $29 over melt, and 1 10th-ounce Gold Britannia are only $27 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're delighted to have this wildly popular returning guest, Bill Holter, a former Wall Street trading branch manager, also an active analyst of all markets, and a licensed bullion dealer, joins us this Tuesday, April 8th, 2025. Bill, thanks for coming back on Liberty and Finance.
Thanks for having me back, Don, again.
Whenever we submit a call for questions prior to your arrival, we always get just a snowstorm of suggestions because people so widely anticipate your arrival here. I'm grateful for that. Today, I didn't get that out there, so I've got some questions for you. The first thing I wanted to talk about is something that's been a story for almost 2 months now, and that's unprecedented physical flows of metals out of the London Bank of England vaults to the COMEX in New York, and then out of the COMEX again for standing for physical delivery at an unprecedented rate. Do you have for us any further insights into the fundamentals that are driving this and whether you expect that this flow of metals may persist, or have we seen the lion's share of it already?
I think it will persist, and I think you answered the question by saying, a lot of metal has been coming out of COMEX for delivery. I never believed that the flow of metal to the U.S. had to do with trying to beat the tariffs, and I think that's been proven because, and I haven't looked the last. I didn't see yesterday's numbers, but I know last Wednesday and Thursday there was another 5 or 6 million of silver onshored, and that was after the tariff date. So, there's no way they would ship it. They would ship it late so that it got here after the tariff. So it tells me that the metal basically has been coming here to be delivered. And I think any additional metal over and above that is just reshoring the metal. I mean, metal has been leased for years and years, and I think some of the entities that lease metal are saying, we want our metal back.
That phenomenon of either nationalization, what I mean is repatriation back to its home country of ownership, has been a big deal for the past several years. It started, I remember, back with Germany asking for its gold back from the COMEX, et cetera, and being told it's going to be a long, slow, drawn-out process, et cetera. Any insight from you on why all these parties who in the past were willing to take on the risk of leasing and letting someone else have possession of their gold are drawing it back within their own grasp at this point?
Yeah, as for Germany, that was back in 2013, 14. I mean, that was 10 years ago. I think they asked for 320 tons. It was a little over 300 tons. And at the time, because they came out and they said, it's going to take several years to do. At the time, I looked up what the cargo what a 747 cargo jet could carry, and they could carry 95 tons. So that could have been done in 4 shipments. And obviously, now that we've seen, 500 plus tons of gold moved from Europe to the United States, shows that, yes, it can be done. And the excuse that they used back then that, oh, well, it's just too heavy and it's too much money to do in a short period of time. It's going to take us 2 or 3 years, which it did. And then when Germany got their gold, it was not even their gold. The gold that was received had completely different serial numbers on them. So something happened to Germany's gold. And now they're considering again withdrawing more gold. And it wasn't from COMEX. It was from the Fed itself. So it was from New York vaults, but it was being held by the Fed, as I understand it. And I think it just makes sense that more and more, the more lies, outright lies that are discovered to be outright lies, is ruining confidence of foreigners. And foreigners are saying, hey, we want our metal back. We want it back. We want to hold it, because if it's in your hand, you have it. If it's held at the Fed, they're probably bullshitting you and your metal's already gone. So I think this is a move to basically take reserves and re-homeland them by foreigners.
One of the concerns there that you're touching on is the concern of the potential for loss of ownership due to loss of possession. The book, The Great Taking by David Webb, I'm sure you're very familiar with as a former Wall Street branch manager and a current analyst, etc. He's going to be coming on our channel. He's got some recovering to do from some surgery, but he's promised he'll be back here as soon as he can. But on that topic, what is it that you understand that ordinary moms and pops across Main Street, all across the USA, probably don't know that they need to know about the real ownership of what they have in such things as brokerage accounts, 401ks, IRAs, etc.?
Yeah, the Great Taking is something that a lot of people don't know about. A lot of people can't believe it. And when you tell people about it, a lot of them want to stick their head in the sand and not believe it. But these laws have been put on the books beginning in 2014 all over the world. The ink is dry everywhere. So these are hard and fast laws that are on the books. And the short of it is, anytime you deposit money with a bank or stocks or have stocks or bonds with a broker, those are not your monies. They're not your stocks, not your bonds legally. They're owned by the bank or they're owned by the broker for your benefit. But the way the law reads is, if they get into trouble financially, they can take your assets because they're on their balance sheet. They can take your assets and save themselves. And you have no legal recourse back to getting your assets back. So just understand, when they do collapse the system, and I mean, the system is going to collapse, whether they pull the plug on purpose or try to keep it up as long as they can, mathematically, this thing's going to come down. And when it does, you're going to lose your assets. And that's obviously the biggest benefit to owning gold or silver and having it in your hand, or even in a storage facility, because in a storage facility, there's not a computer button that they can push and take your metal. It's actually got to be, physically moved or taken. But gold or silver, they neither of them can bankrupt. And when the system bankrupts and people lose their assets, gold and silver will be the last two men standing. And if they're in your hand, you have wealth.
Yeah, I wanted to clarify one thing that you touched on there that most people probably don't understand, and that is storage facilities do not, when they're storing your metals, they don't put your metals on their books. It's not an asset of theirs. It's just your property that they're guarding. You're paying them to guard it. So their assets are their cement and steel walls and their vault doors and their alarm systems and their things like that, and their employees are their guards and all that sort of thing are things that are on their their payroll, their balance sheet, that's their balance sheet, and their insurance that they pay for, but the assets themselves.
With one caveat, as long as if you're storing, you store it segregated. You do not want to store in a pool, P-O-O-L account. That means you're storing with other people. Your metal is intermingled in the pool, and that's, you want it in your name. You want it segregated.
I guess one more important point is you've got to keep current on paying for your storage. If you stop paying for your storage for an extended period of time, many storage facilities have in the contract that you signed is that if you're taking their space in their vault and they're incurring costs on your behalf to store your metals, and you're not paying your fee for having it there, eventually they'll have to start taking from the metals after they've tried to notify you. They're always trying to get you to pay, but if you can't be reached, or if you refuse to pay or whatever.
Right, but they can't take the whole amount. They can only take roughly 0.5% per year is what your storage costs.
Yeah, just to cover the costs. Yeah.
Correct.
What about the uncertainty that seems to be spiking in our current financial world? We've seen more volatility in the past few months than we've seen in a long time on the stock markets, for one thing, the bond markets. A lot of people talk about the Trump effect of uncertainty leading to chaos, his negotiating style, his method of operation, and he says it's part of his art of the deal, or the way he gets his adversaries or his business opponents on their back feet, on their heels, is by being unpredictable, that sort of thing. But it can lead to a lot of volatility as the system tries to anticipate and gyrate and respond and react, whether it's tariffs, whether you name it. Any thoughts from you on, first of all, this phenomenon of increased uncertainty, chaos, and volatility? Do you see that persisting beyond just this initial, 100 days of presidency? And secondly, how do you see, what are remedies that people can use, people or institutions can and should be using to protect themselves from that uncertainty, chaos, and volatility?
Well, yeah, the volatility, just the last 3 or 4 days, you've seen, NASDAQ's now already in a bear market. How often do you see markets down 10, 12% in 2 days? So the volatility that we've seen in what you're calling the first 100 days has really picked up over the last week. And the danger to the volatility is that you throw participants offside and into margin calls. And if you do that on a grand enough scale, if it's big enough and far-reaching enough, you're going to hit somebody who's big that can't pay. And that will start off a daisy chain of derivative failures. There's over $2 quadrillion worth of derivatives outstanding, completely dwarfs the financial system, completely dwarfs all treasuries and all sovereign central banks on the planet. So the danger is that you get a derivatives player that becomes insolvent, and then it will spread like a wildfire from there. As far as advice, I view the financial system as a complete Ponzi scheme that's going to be taken down, where, I just talked about the derivative failures, but also the assets themselves are going to get wiped out in value. It's time to get out of the pool. That's, I guess, the best way to say it is, or get off the railroad tracks. And the best way to do that and hold capital, again, is through gold and silver, because they cannot bankrupt, and the system itself is bankrupting.
The biggest players that most people know by name, such as Warren Buffett and George Soros and others, seem to, in their foundations and in their companies, et cetera, having been raising, basically divesting of bank stocks, raising cash positions, et cetera, perhaps in anticipation of this. Do you know anything about who, and insiders selling 6-to-1 or 7-to-1 in major, even tech companies ahead of this? Can you give us kind of your high-level view of what the biggest players in the market have been doing, maybe perhaps over the past 2 quarters, and what that usually signifies when those kinds of actions happen?
I think you could go back to October, November of 22 when Russia's reserves were sequestered. From that day forward, you've seen hedge funds, you've seen foreign central banks, you've seen foreign treasuries, foreign sovereign hedge funds. They've been unloading gold day after day after day, and that's why if you look at a chart, it looks like a tractor in first gear. No big drops, no big spikes upward, but just bottom left, top right. So I think that's been a big hedge because understand that gold or silver, or gold nor silver, are issued by a government. If a country holds gold and they hold it in their own vault, there's no way that can be stolen from them. There's no way that can be sequestered like the 300 billion in Russian treasuries were sequestered. The world looked at that and they said, hey, if they can do it to Russia, they can do it to us. And the decision was made to buy less treasuries and buy more gold.
You've often been an advocate, or I would say for a long time, you've been an advocate of owning U.S. mint lineage coinage, whether gold or silver, and particularly a fan of junk silver. We get asked by clients every week, what's the best form of gold or silver and in what quantity to hold from a preparedness standpoint in the face of unknowns financially and monetarily going forward. Can you give us your top thoughts that you bring forward when helping people to discern whether they should emphasize gold versus silver more? And then we'll get into U.S. mint lineage and we'll get into why junk silver in particular.
Yeah, because of the ratio, and now we're close to 100 to 1, takes almost 100 ounces of silver to buy 1 ounce of gold. You want to concentrate on gold. I'm sorry, you want to concentrate on silver. You want 70% or more. If you're just starting out, you want 70% or more in silver versus gold. And then at a later date, as silver outperforms and the ratio comes down, then you look to start swapping silver into gold, and you'll end up with more gold ounces. When the ratio comes down to 50, 40, 30, as silver outperforms, you're buying cheaper gold with more expensive silver. So you end up with more ounces. As for the U.S. mint lineage, the reasoning behind that is, for instance, I mean, if you buy a gold eagle today or you buy a silver eagle today, the mint is basically selling it to you through a broker conduit. It'd be really difficult for them to sell eagles to you today and then next week and say, oh, by the way, we're confiscating it. You have to sell it back. Now, could they do that with Maple Leafs or Krugerrands or bars or whatever? Yeah, they could do anything they want. And they could do something with U.S. mint lineage coin, but there will be lawsuits and there will be lag time where there would not be with foreign sovereigns or bars or generics. With silver, I believe it's hands down that you want to own junk silver. It's the smallest form, 14 dimes, roughly 14 dimes equals 1 ounce. So that's going to give you 14 barter transactions in a system down scenario versus one, whether it be a bar or a round or a foreign sovereign or even an eagle. So you want the smallest denomination. They are U.S. mint lineage. They're readily recognizable. They really can't be counterfeited because junk can't be shiny. Junk needs to look like crap. It needs to look like it's been used because it was used. And when I said readily recognizable, as long as the coin says on it 1964 or earlier, you know it's a 90% silver content. So for silver, I think hands down, you want to do junk. Switching to gold, again, you want U.S. mint lineage coin. It's much more likely that gold would be confiscated than silver. And just to mention on potential confiscation, it's my opinion they won't go after individual holdings. It's far more likely, in my opinion, that they would nationalize mining operations. They'd get more gold faster doing that, and going door to door, there's going to be deaths on day one. But as far as gold, you want either Eagles or Buffaloes, or 333 gold, which are the Liberties and St. Gaudens. They're as cheap as I've ever seen them in relation to spot. I mean, you can buy, I don't know, an MS 62, 63 Lib or Saint for basically the same price as an Eagle, or maybe even slightly less. So the pre-33 gold, which, a lot of people shunned in past years because they had a 20 or 30% premium over spot. There virtually is no premium over spot. Now's the time to buy those.
Yeah, we just had a very well-received campaign of offering people to swap out 1-for-1 modern gold bullion coins for the pre-33s. And there is a 3.25% difference in weight, and that helps to make the numbers work out. But it is closer in price than anybody's ever seen it. Andy says it's he's closer than he's seen in 35 years. So. Bill, what's the number one question that you get asked by new clients who are reaching out to you and having concern about their financial preparedness and readiness and ability to handle volatility, that sort of thing going forward? Any clear, most common concerns that you get faced with as a broker?
I'm not going to say, yes, there are some clients that ask this, but new people or people that, I've conversed with over the years, the biggest question is when. When's it going to happen? When? And all I can say is open your eyes, because it's happening right before your eyes.
So help draw the dots together for people when you say it's happening right before their eyes. One thing that comes to mind is the destruction of value of the dollar from where it was in 1913 at the foundation of the Fed, or in 1971 when Nixon stopped the convertibility of the dollar from gold, et cetera, the loss in purchasing power. And that's one that everybody can relate to. But what else do you mean when you say it's happening right before your eyes?
You could use a better date to use is the year 2000. I mean, gold was $270 an ounce. Now it's $3,000. So that's over a 10-bagger with no risk. And when I say no risk, gold can't go bankrupt. There's not too many assets that have been a 10-bagger since the year 2000. When I say open your eyes, I mean, what's happened just over the last, 6 or 8 weeks? Just all the revelations coming from Doge of all the bullshit programs where money's gone. Money has gone, and when I say money, this is tax money, has gone into things that the public absolutely does not want and acts against the public itself by charter. So I mean, just the revelations of how crooked everything is, and this is something that you and I have talked about. Many in the alt media have talked about for years. How corrupt everything is, and we get trolled and poo-pooed, and you're just making stuff up as you go. Well, guess what? Just in the last 6 or 8 weeks, there's so many things out there that we knew were bad, but it turns out what was actually happening was worse than what we thought. So, that's just one thing. But if you look at what Doge has revealed, foreigners got to be looking at the United States and say, hey, wait a minute. I put my money there because I thought they were a safe haven and had a good rule of law, but they're all crooks. So, I mean, that's an example right there.
So there you're talking about our dependence on foreign holders of the U.S. Treasury bonds for the stability of our bond market, et cetera. What happens if there's a greater, and we were told that just after Trump announced tariffs against all countries, including China, that China sold a huge swath of their U.S. Treasuries. Can you highlight what you know about that, about the risk that we face, that ordinary person has zero control over, about the instability of our financial future based on foreign actions by foreign countries or foreign individuals as far as dollars are holding or treasury holding?
Right. Just understand that U.S. Treasuries are the foundation to the global financial system. They're the foundation for everything. And it used to be, years and years ago, gold was the foundation. Gold was a strong foundation. The problem with treasuries is that treasuries are issued in dollars. They contractually promise more dollars. And as the money supply gets printed and created, the dollar loses value. I mean, just the illustration, 270 gold to 3,000 gold, that's, the dollar since the year 2000 has lost 90% or more than 90% of its purchasing power. The danger is that foreigners completely shut down and say, we're not buying any more treasuries. Not only that, we're going to sell the treasuries we have. Well, who's the buyer going to be? The buyer could only be the Federal Reserve. So the buyer of existing treasuries and the lender to the treasury for new treasuries in order to deficit spend or cover the deficit, the danger is that what has been outright monetization becomes outright public monetization. In other words, the public and foreigners, that human beings will be able to see that the U.S. Treasury has limits to what they can borrow, and that limit boils down to whatever the Fed can buy and whatever the Fed can lend. And outright monetization, all you have to do is go back through history. Anytime a government monetizes, the currency goes away, the currency evaporates.
Yeah, so I've got a little thing to show here. I've been reorganizing here, and I came across a bag of Mercury dimes. These are some of what you were describing as far as 90% silver coin. So our coins used to be intrinsically valuable. Now, since 1965, they haven't been. They're basically worthless. And the dollar itself, in its digital form and paper form, based on the full faith and credit of the United States, but majority held by foreigners. And if they lose faith and credit in the United States, faith in the credit of the United States, then it's a confidence game. And how do you see?
It's always been a confidence game. It's just that people are now understanding when their confidence breaks a little bit, they're like, it's a confidence game.
Bill, you write on a weekly basis and you interview and you post a lot of these things on your website. Can you tell people, and we'll put a link in the description of this video on how they can find you, but let people know where they can find you.
Sure. Just go to billholter.com. There's going to be some changes to that in the near future, and that will, I believe, be announced with. I plan to in June or July. I plan to begin doing live conferences. So I'll keep people up to date on that. But that'll come out on the website. And if you need to reach me, for business purposes, as far as gold or silver, my business email is bholter@proton.me.
Well, Bill, we're always grateful for your presence here on Liberty and Finance. It's remarkable how many people, when I speak with them, mention having watched our channel for a long time, but then they say, and we always watch Bill Holter too, wherever he shows up. So we're grateful when you show up here on Liberty and Finance, and we consider you being in our corner and helping our subscribers and viewers to keep on the right side of things as they stay prepared. You've talked a lot to us about physical preparedness as well recently, so we won't necessarily delve into that today. But folks, if you want some tips from Bill on how to be less dependent upon the complex supply chain and the tiny, thin inventories of grocery stores and all that sort of thing, take a look at some of our interviews with him. If you just search Bill Holter, Liberty and Finance, we generally touch on that every time we meet. And Bill, as always, just on behalf of all of our viewers, thank you for joining us again here on Liberty and Finance.
Thank you, Dunnigan.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 8th through April 15th, 2025, while supplies last. First this week, we feature 2025 1-ounce silver Canadian maples at just $3.49 over spot per ounce. Constitutional or junk silver is just $1.99 over spot per ounce. 1 10th-ounce Platinum Britannia are just $29 over melt, and 1 10th-ounce Gold Britannia are only $27 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.